Hello everybody. So this is my second time recording this video. I've been plagued with technical issues. Anyways, I want to talk about LifeMD and HIMSS. LifeMD drops less is the title of this video. Great Q3. So let's go back to the beginning. They both reported their Q3s. I would characterize LifeMD's Q3 as good. I would characterize the Q3 of HIMSS as great, outstanding actually. HIMSS Q3 was arguably better than LifeMD. LifeMD was a good Q3. It was a good Q3. So on average, it's a great Q3 for both of them. But here's the difference. LifeMD is down 17% ever since they reported their Q3, and HIMSS is down 18.72%. And I consider HIMSS has had a greater Q3 than LifeMD, and HIMSS is down more. And so the market, I believe, doesn't really pay attention to these stocks right now. The market is not being a weighing machine right now. The market is being a voting machine. Of course, HIMSS beats revenue much more than expected, and that was a positive surprise for many of us who follow HIMSS. LifeMD kind of missed a little bit on both metrics, but here's the thing. LifeMD is a very small cap. These metrics are the result of just a few analysts. There's not that many analysts following LifeMD, which means the question is how much confidence do you actually place in the 6 cents of EPS and the 60 million? How much confidence do we place on that, especially because they sold WorkSimpli? Nobody could have really foreseen that. So I don't really necessarily think it's exactly a miss for LifeMD. Like I said, LifeMD good quarter, HIMSS outstanding quarter, but LifeMD is still down less than HIMSS after the reporting the quarter. So that's the point number one. And that's the point is the market is entirely irrational in my view. I feel like the market was going to dump LifeMD and HIMSS regardless of whatever the Q3 would have been. And that's because of macro flows. That's because of liquidity issues. Things are getting a little better today. But the sentiment around these smaller cap stocks seems to be something like, oh, GLPs are bad, small caps are bad, and so there is some sort of a sell-off. Before I tell you about the investment highlights and what's going on with LifeMD, let me just show you the first comment from the first analyst during the Q&A on the call. Congratulations on a good quarter. So I'm not the only one who will, gladly say it was a good quarter for LifeMD. I wouldn't read anything into this short-term price action, especially because LifeMD, who didn't have a quarter as good as HIMSS, is dropping less than what HIMSS dropped. These short-term price movements don't inform you about the quality of a firm under the hood. And as far as LifeMD is concerned, to me, it's a high-quality firm. They have their app, the LifeMD app. Their LifeMD app is an electronic, medical records system. It's a telehealth system. It connects their providers, which are hired. LifeMD has hired providers in New York City. It connects the LifeMD doctors to actual patients around the US. They can provide up to 1,000 patient visits a day, thanks to their end-to-end platform and their app. So it's a telehealth app, is what LifeMD is, and they have, of course, their own pharmacy, which they are still in the process of building. They announced they were converting it to a 503A facility, which is going to make them more profits. They have a lot of partnerships, they have a lot of transactions, and they are cash flow positive. They are making money, 14 million of adjusted EBITDA and no debt, because they sold WorkSimpli, they paid off the debt, and the margin is high. Actually, you'll note the margin is higher than at HIMSS. 85% gross margin is actually almost 10% higher than at HIMSS, the margins at LifeMD. So that's what LifeMD is. LifeMD has an enormous addressable market. What is LifeMD doing? LifeMD is disrupting the mom-and-pop doctor. They're trying to disrupt the mom-and-pop doctor by having a doctor on demand, a doctor subscription, $19 a month. You get access to a doctor, and the doctor can prescribe many things to you that may help you with your issues. And LifeMD, of course, you may remember the spike of LifeMD stock when it traded at $15. That was because of the traction they were getting with the GLP-1 business. And GLP-1 business, as they mentioned on the call, is still roughly 50% of their business. So this is the tale of a mini HIMSS that has a bigger GLP-1 business than HIMSS. It's a big GLP-1 business. And one of the key distinctions, of course, of LifeMD compared to HIMSS is that LifeMD tries to work with insurance companies and get insurance companies to cover your GLP-1s or other medications for the LifeMD branded platform, not for the RexMD platform, but for the LifeMD branded platform. HIMSS does not do that. HIMSS does not accept insurance at all altogether. So let's talk about the valuations. The valuations, and despite the fact that they both dropped a lot since their Q3s, and HIMSS actually dropped more than LifeMD, it's important to note that in the way I value stock, LifeMD is about 3 times cheaper than HIMSS. So for each 1% forward revenue growth, and analysts are telling me 24% next 12 months growth for the top line at LifeMD is what they expect. For each 1% revenue growth, I am paying a 0.03. While for HIMSS, for each 1% of revenue growth, I'm paying a 0.11. So HIMSS is more expensive, and even though it grows faster, it is that much more expensive. If actually you look at enterprise value to forward revenue, you can see LifeMD is only trading at half of what their forward revenue is expected to be. HIMSS is trading at 2.75 what their forward revenue is expected to be, with LifeMD having 85% gross margin, so 9% gross margin more than HIMSS. To me, both of these businesses are trading way too cheap. They should trade higher than that, but LifeMD seems like the more value play, but it is also a riskier play because one could argue that LifeMD is a smaller cap, it's less understood by the market, it's less well known, it's more prone to sell-offs, even though LifeMD has been selling off like in the early days. You wouldn't think LifeMD HIMSS. You wouldn't think HIMSS is an $8 billion company when you look at the sell-offs and the roller coaster that HIMSS has been. LifeMD has been a roller coaster too, but it is a smaller cap and therefore it's subject to many more sell-offs. But under the hood, this company is performing. They have a vision. If you look at their revenue growth trajectory, it's not growing exactly as fast as HIMSS, but it is clearly growing from nothing to, let's call it 200 million, by next quarter. So from nothing to 200 million, they did a 20x in revenue in 5 years. This is a growth company. This is a growth company right there. And now that they divested WorkSimpli, the market is more likely to understand them. There's a few things they said on the call. One of them is that the ED drugs are rebounding at RexMD. They had already told us that last call, but there's a rebound in the ED drugs. Their hormone therapy, i.e. testosterone, is growing and they're getting some traction. They're working on investing on a 503B plan for their pharmacy, and that's expected to improve their margins, the build out of a 503B facility. They still mention that compounded GLPs are hurting them. And I'm assuming this is hurting HIMSS too, because HIMSS compounds GLP-1s, but only in specific situations. Otherwise, they are more likely at HIMSS to get people on liraglutide, for example, or on metformin, which are non-patented drugs, which are generic drugs. But what they explain, of course, is the issue is that whenever they have a patient to come see them for GLP-1, they may prescribe a GLP-1, and then the next day, the patient gets on Instagram or whatever, and they see an ad for a very inexpensive, sometimes perhaps Chinese version of a GLP, and they're likely to cancel at LifeMD to go with the even cheaper, non-branded, compounded version of the GLP. That's hurting LifeMD. I'm assuming that's hurting HIMSS a little bit, although HIMSS as a little bit of a compounded GLP-1 business within the very strict definition of the FDA. But as we know, for following HIMSS, not every competitor to HIMSS and LifeMD follow that very strict definition that allows compounding. They don't always follow it, and sometimes they just compound away. And the bet that LifeMD is making and has made so far is that the GLP-1s they'll try to get their customers to pay for the GLP-1s via their insurance benefits. That is one of the main distinctions between LifeMD and HIMSS. LifeMD tries to use your insurance benefits for pharmacy. HIMSS doesn't do that. But because LifeMD, A, does not compound anything, and B, tries to use insurance benefits, that means that they are the only, quote-unquote, the only mainstream or the only bigger pure play telehealth company that actually sells branded GLP-1s like Wegovy and Ozempic. These are available on LifeMD, right? Ozempic used to be available on Hims, but we remember when they cut the deal and when they got out of that deal. LifeMD is the last player standing who still has the partnership with Novo and with Lilly, and they can do that because they try to get the insurance to reimburse some of it. And so there are clear catalysts in 2026 about getting insurance to reimburse it. One of the catalysts they mentioned is that Medicare could potentially cover GLP-1s in 2026, and that could be an enormous catalyst. And then another catalyst for LifeMD is the advent of oral Wegovy and oral orforglipron, which would be oral Wegovy, essentially, or oral tirzepatide, oral dual-action GLP-1, coming potentially to LifeMD first in 2026 when this gets approved by the FDA. And this is a big deal because there's a lot of customers that don't want to do needles, that don't want to do injections. And of course, we know Hims is going after these customers via their metformin-based pills. Oral Wegovy could drive a lot of sales for LifeMD, including with Medicare and Medicaid. Either way, they're predicted to grow at 24%, and this company, in my view, is way too cheap. Even try to look at it from the value of a lens, from the lens of a value investor. Their enterprise value over EBITDA is a 7. So this stock is being left for dead, is being ignored by the market. Although, and I will say one last time, it is dropping less after Q3 than Hims has dropped, and that the relentless decline that Hims has experienced over the past, week and a half. And so this tells me that the movement of these companies has much more to do with liquidity issues in the market than with individual performance. So to conclude, LifeMD, they had a good quarter. Hims had a great quarter, but that didn't really help LifeMD. I mean, I guess that helped LifeMD to have a good quarter, because if they had had an outstanding quarter, they might have been down as much as Hims. So I don't read much into that price action. I like the stock, so I don't read much into the price action right now. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on X, follow me on Patreon. Thank you for watching, and have a wonderful, wonderful day.